Hey everyone, what's going on? It's Jason here. Today we're going over AMC, doing a little bit of recap, also going over why some hedge funds today had to liquidate some of their positions and how that could overall affect AMC. If you could, make sure you guys smack the like button below. Not only to help out this video, but it also helps out more people discover about AMC. Also, if you're not a sub, make sure you guys hit the sub button. Remember, at 10K subs, we're also doing a giveaway over on the public app of some AMC stocks. Before we get into it real quick, if you guys are wondering what I'm using Webull. There's a link down in the description. Get 2 free stocks up to $1,800 when you sign up, put $100 on. You also get the tier 2 NASDAQ views for 3 months. As you can tell here, today was a wishy-washy, up and down kind of day. The market was everywhere today. Honestly, AMC did finish with a positive 1.07%, which kind of, if you look at a lot of other stocks today, a lot of them was in the red. There was some green, but barely in the green. So honestly, AMC did scathe pretty great today, and overall, I'm not going to complain. This morning in the pre-market hours, we did start out about $10.35, which is about to where we're at right now, honestly. If you were to go back to the end of Friday, obviously, which is still up overall, we had an up and down. It's very, very, very low volume day today. The volume numbers were 37.18 million. So you can tell how low volume numbers were today. And a lot of that low volume was honestly caused by the low markets today. Every time we have a low market and the market is doing bad, it seems like people just aren't interested in AMC for the day. But anytime we see some green going in AMC and seeing the green going in the market, it seems like everybody's hype. There's lots of euphoria, and we pour on over 100 million volume on the day. And some points, a week before last, we're up to 300 million. I'm hoping maybe we can see a return to that, because I do think that's where we can see some major growth in AMC. But right now, I would just like to get out this dump that the market's in. And there's multiple reasons why the market's in a dump. We'll go over those some in a little bit. We did enter market hours at about $10.29. We shot all the way up to $10.76. We quickly made our way back down to $10.14, and then back up to $10.67, and then back down to $10.23. And it was kind of just, up and down. It made it back to $10.45 going into power hour. And again, we did finish down 10 cents on the day right there at $10.35, which is, again, a positive note at 1.07%. And after hours right now, with another hour and 30 minutes to go, right now it is 5:36 in the PM, Central Standard Time, 6:36 Eastern. We're at $10.35. So really it's been barcoding up and down a little bit here and there. But right now, we're back to $10.35. And a lot of that reason is because there's no volume right now. There's really no volume in aftermarket. You see hardly anything's moving in aftermarket. This is probably one of the lowest volume days I think I can remember in a long while. Now, one reason why I think you've seen these bigger swings today, up and down, up and down, up and down, is because we had some hedge funds today start liquidating some of their assets and their stock. They were over leveraged, too much margin, and they finally got called on that margin as the stock market kind of got pulled down. Also, right now, you do have renewed fears on the pandemic as well, because you have the European market. Some of the European nations are shutting down again. You have rises in cases in the United States again with the no mask laws going away now. So you have people not wearing masks as much. Things like that. So obviously you have more spread of the virus. So you do have multiple states now that are very, up a substantial amount from last month. So you have those worries as well. You have the 10-year and 5-year Treasury yields up higher than they have been in the last year. That doesn't help at all either. So you have a lot of fear in the market, a lot of people freaking out. You have hedges over leveraging, and that doesn't help at all either, because when they get called on margin, they start pulling out, and you have this domino effect happen that makes the whole market kind of tumble. I did want to bring up this meme of the day, though. It's always good to have on a bad day to have a good meme. It says, "Honey, I got Friday off. We can use the spot bonus I got at work for a weekend getaway." Me after I dumped all of it into AMC. Oh man, these memes never get old. It's good to have a laugh even on a bad day, right? Now, I have been getting asked a lot in the stream about the executives selling large amounts of stock. Again, I guess it would depend on what you call large, right? It's mostly on an average day in AMC, you have about 50 to 60 million sells or buys, going in and out of, volume wise. Here, usually, some of these executives are selling maybe 100,000 shares. Again, I wouldn't really call it large, but I guess it is large compared to most people. $1 million is a lot of money. AMC Entertainment stock has rocketed so far in 2021 in volatility trading. And executives of the theater chain recently have sold large amounts of stock. after selling none last year. In fact, for 3 out of the 4 of the executives, these are the first stock sales on the open market on record. Now, again, you do have the stock, price up right now. It's inflated. It's up, right? So you're going to have these people selling some of their stocks. This is how it is. AMC stock has soared nearly 400% year to date, fueled by so-called meme trading. At one point, when the shares hit $20.36 in January, they were trading at nearly 10 times the year-end price of $2.12. Again, that was kind of depressed, though, from people shorting the stock. The S&P 500 index has managed to rise only 5.8% so far this year. 4 executives sold a total of $3 million of AMC stock earlier this month. AMC didn't immediately respond to requests to make them available for comment on their stock sales. But again, it's hard to say it did total $3 million, right? These stocks right here were not loaned out to kids. I see this everywhere. The stocks were not loaned out to kids. These right here are actually sold stocks, right? There was some people that gave stocks to kids. Yes, these stocks were actually sold. So I want to get that point across real quick. These stocks were actually sold by these executives. Again, it's not all their shares either, right? You got to remember, guys, these guys are going to sell some of their shares when the stock price is up. It's just how it goes. And again, you might read into this as seeing large, but it's really not that large compared to the overall daily, buys and sells in the market. Having, a couple million sold within a month or so, it's not that big of a deal. I don't mean by a couple million shares. I mean like 100,000 shares by each one of these people, equaling maybe 300,000 to 400,000, is quite small compared to the number of shares outstanding or number of shares that are out there, or the number of shares that are sold back and forth on a daily basis. The selling was led by Steven, Executive Vice President and Chief Marketing Officer, who sold 100,000 AMC shares on March 23rd for a $1.1 million or $10.52 each on the average. He now owns 108,000 shares, according to the form he filed with the Securities and Exchange Commission. So again, he sold half his shares. Colanero, who has been with the company since 2009, last sold stocks in January 2018, receiving $86,000 for 5,364 shares, a per share average of $15.95. Kevin Connor, Senior Vice President, General Counsel, and Secretary, sold a total of 72,358 AMC shares over March 16th and March 17th for a total of $982,600 at a per share price of $13.58. Connor, who has been with the company since 2007, now owns 65,884 AMC shares. So it seems like a lot of these guys are selling off pretty much half of their shares right now, right? Elizabeth Frank, Executive VP Worldwide Programming and Chief Content Officer, sold 40,000 AMC shares on March 16th for a total of $542,400 on an average of $13.56 each. Frank, who has been in her post since July 2012, now owns 173,780 shares, so she sold a lot less than half. Chris Cox, Senior Vice President, Chief Accounting Officer, sold 29,068 AMC shares on March 16th for $373,000 a share, average price for $12.86. Cox, who was named his current position more than a decade ago, now owns 42,000 shares. AMC executives aren't the only recent stock sellers. Private equity from Silver Lake had been one of the company's largest investors, sold its entire stake in January for $713 million. And I think we all know about that one. Again, they even came out and said, hey, look, the price soared up, we sold. I mean, again, can you blame them? I don't know. They're firms, right? They're going to take advantage of any kind of inflated prices at the time. That's just how it is. Again, this right here doesn't affect really the number overall of AMC. Again, it's very small drops in the bucket compared to how many of these shares are going in and out each day and the current volumes every day. Again, today was the lowest volume of 38 million. But again, usually it's like around 58 to 65 million on the average. And some days we've had up to 300 million here lately. This is not that big of a news story. I would not worry about it. But I did want to go over this article right here, written by Forbes. It says how Goldman and other Wall Street giants loan billions to someone who traded like a meme stock gambler. This is going to take a hit. This is going to take a hit at Reddit, obviously. Again, right? I mean, it's just how it's going to be. They're going to do that, obviously. They're trying to bring in views. It's clickbait. But it does go over how, obviously, this these couple people right here did make some of these bigger investment firms kind of have to do liquidation today and Friday, and reason why you've seen these big pullbacks in the market. Imagine if Goldman Sachs lent $1 billion to Roaring Kitty. News about the margin calls is once again rolling markets, except this time instead of industry outsider like Robinhood and Roaring Kitty, a leading GameStop bull on Wall Street Reddit. The drama centers on a traditional giants of financial establishment. Last Friday, brokers including Credit Suisse, Nomura, and Goldman Sachs began dumping huge blocks of shares in a few select companies, including Viacom, CBS, Discovery Communications, and Baidu. With the size of the sell-off reportedly reaching $20 billion in the ensuing days, it emerged that the liquidation came after a hedge fund called Arcos Capital Management defaulted on margin calls. With Bloomberg reporting the defaults were related to a series of complex derivatives and swaps that allowed Arcos to assume significant stakes in companies without directly buying their shares. The nature of these deals meant the fund was also able to largely avoid financial disclosure about its positions. Now, this does lead back into Citadel and others. Right now, obviously, there's lots of lots of things going around now that obviously this is pretty much what some of these other hedge funds are probably doing as well. The fallout has been swift. In the span of 2 trading days, shares of both Viacom and Discovery have declined some 30%. Arcos Finance are now under extreme pressure, according to the Wall Street Journal. Shares of the Credit Suisse are down more than 12%. And Nomura stock has dipped more than 13%. Credit Suisse may have lost between $3 billion and $4 billion in a fair, and Nomura suffered a $2 billion hit. The Financial Times reported. As you might expect with numbers like that, both banks have warned investors that losses could have serious impact on their first quarter results. For now, at least it appears the effect of the fire sale on a larger financial ecosystem will be muted. Even some of those directly involved may escape any major damage. Goldman Sachs expects its potential losses to be immaterial per Bloomberg. So this right here pretty much means, hey, look, this guy over leveraged. They shouldn't have lent this guy so much money. There was no regulations involved there because he wasn't, technically a hedge fund, right? He was doing stuff in a roundabout way, which included him not having to report these things. And he over leveraged himself into some of these stocks. And when it started falling, he got called on margin. And that margin got him liquidated big time. So these companies had to go through and liquidate tons and tons and tons of stocks, 20, 30. We read it today, up to $60 billion of stocks today were liquidized between Monday and Friday. But the ordeal could do serious damage to some, and it serves as the latest reminder of how loosely regulated hedge funds and heavily engineered derivatives have the potential to send shockwaves through the global economic system. And this is one reason why we've seen some of these pullbacks today in the market overall, is because of this right here, this same exact thing. Arcos, a New York-based fund run by Bill Hang, one of the famed Tiger Cubs who got his first start working for Julian Robertson at the Tiger Management. Founded in 2001, it was originally known as the Tiger Asia and operated as a hedge fund. In 2012, though the SEC charged Hwang and the firm with insider trading and market manipulation, the Tiger Asian admitted its guilt and paid $44 million in fines and penalties. Newsflash, guys, they made billions of dollars with a B, by the way, on this thing back in 2012, and back before that as well. They paid $44 million. This is the reason why these guys continue to do it even now. The next year, the firm changed its name to Arcos and shifted its formal structure to a family office, making it exempt from some SEC reporting requirements. So see, they changed from a hedge fund to a family office structure, and that kind of got them off. And this is what led to that, right? There's less regulations there when you're not a hedge fund. Hedge funds already have not really good regulations. Then you change yourself to a family office, you even lose some of that again. But yeah, that's some of the crazy stuff, and that's one reason why we've seen markets pull back today. It was like a domino effect, right? These banks had over leveraged this family-owned business, aka a hedge fund, just kind of changed its name. That will get around even more regulations. They over leveraged them, and what happened was they got caught in that margin when the market went down, and they couldn't cover that margin. And that obviously they had to liquidate all their shares, upwards of almost $60 billion altogether. $60 billion since Friday had been liquidated. That's the reason why you've seen a lot of these shares and all of these stocks coming down. It's not only if they don't have a direct effect, they do have a direct effect because you have other ones freaking out that maybe more people are over leveraged. So you see more people selling off, getting scared, and that's what happens. On top of that, you have the pandemic fears again. You have the 10-year and 5-year treasury rate yields going nuts again. You had this ship in the canals over in Egypt as well, making fears. Finally, it got released today, though. It did get released, thank goodness. So that's one less worry. But there's so many other things that can be going on right now that's causing lots of fear in the market. And I'm hoping we kind of see this come to a little bit of a hedge tomorrow. And we kind of see this kind of dissipate a little bit. I'm ready for some greener days, though I do like these good buying days. As I always like to say, red days are buy days, aka red days buy, green days you fly. It doesn't mean green days you sell. It means green days you ride that rocket up because you bought on those red days and now you're ready to make some money, which is what we're all about. Remember, guys, hope you guys had a great day today. Hope you guys are still having a great day or night, wherever you're at in the world. If you have, make sure you guys smack the like button. Make sure you guys hit the sub button. Also, remember tonight, and it's just in a couple hours actually, we're going to be doing a live stream, a private live stream over on the Patreon. If you guys want to be a part of the Patreon, there's a link down in the description. Anybody with a 15 and above can be in those things, ask me questions and stuff like that. There's also a one-on-one session in there as well. If you guys want to be part of the one-on-one sessions, you can go down there and click and look at all the different subscriptions in the Patreon. Remember, there's a Discord link down below as well. If you guys want to be a part of Discord, Discord is free for everybody. I'd love to have you guys in there. There's over 1,000 people in Discord, and we're always hanging out and having lots of fun. I'll see you guys on the next video. Peace.